Hey, Nolan, it's very good to see you. And we have a really important topic today. We all feel terrible about the economy, but that's actually good news. Americans have never felt this bad about the economy. The University of Michigan Consumer Sentiment Index, take a look at this, Nolan, cratered from 58.4 to 50.2. That's the lowest level since data collection began in the 70s. And I know you're hearing about concerns from clients. What's contributing to our pessimism?
Well, I mean, a few different things contribute to my pessimism. I know that like at home, it's gas prices,
Right.
grocery prices, all of those things make consumers a little bit less confident in what's going on. But we also have kind of a combination of a few different things. We have higher than normal interest rates set by the federal government, higher than normal inflation,
Hmm.
ongoing international conflict, as well
Hmm.
as basically a global inflation pressure. That just causes a whole lot of things to go haywire in the economy. And usually consumers can feel that. And, it hits us close to home. Like I said,
Hmm.
grocery store gas prices, things like that.
Right. Many, many reasons. So
Mhm.
you would think that low consumer sentiment would contribute to poor stock market returns, but sentiment is actually a contrary indicator. What does that mean?
A contrary indicator is an indicator that basically means when things are looking grim, that's usually when, a bounce back up or some sort of
Hmm.
recovery is on the horizon. It's not so much trying to time a trough or time the bottom of a dip or a recession, but it is saying that usually when consumers feel very, very bad, the subsequent market performance is pretty good. So when we see historic drops and when we see consumer confidence levels go down, we can just go back in history and look at some of the recoveries. So we partner with a company called Brookstone Capital Management, whose CIO Mark Diorio crunched all of this 50 years worth of data, basically to show when consumer sentiment goes down, the subsequent returns in the S&P 500. There's a lot of information on this chart here, but the point is in the top left right there, where you have the sentiment peaks and the sentiment troughs, and then the subsequent 12-month returns. You can see through this period, through the 8 troughs we've experienced, the next 12 months in the S&P 500 have netted nearly 25% total return. It's not, again, trying to time the market, but it is trying to say usually during times like this, there is some sort of recovery on the back end.
Right. I think it's always helpful as human beings to kind of look at the data because it helps us take the emotion out of it. Because as you know, we invest emotionally. It's hard not to. And as you said, it's not about timing the markets, but time in the markets. And something else that you and I have talked about before is that when you try and time it, this is an example of a $10,000 investment over a 15-year period. If you just miss the 10 best days, look at what happens to your profits.
Yeah. And one phrase that I've been using with clients all the time lately is when in doubt, zoom out. When you've lost
Hmm.
a significant amount of money, all you really have to do is just look at a longer period of performance and it should reassure you at least a little bit. Things were pretty rough in 2008, pretty rough in 2001, the late 80s. There have been lots of crashes throughout the years. But the function of the US economy and the function of our markets in general is the idea that companies will continue to grow and get larger. And if
Hmm.
that's the way that things continue, which has always been how it goes, then stocks will most likely continue to perform pretty well over time.
Right. Well, this is so helpful to talk it through. Again, it helps to look at history to kind of help us not predict the future, but at least be prepared for what's coming. Nolan, this was really helpful. If somebody has questions, what's the best way to reach you?
By phone, 616-301-2581, or we do have a contact us box on our website. It's cornerstone-rp.com.
Very easy. All right, Nolan, thank you.
Thanks, Aaron.